everyone and welcome to FOREX Trading. Hope you had an amazing week and thank you for watching this video. My name is Cris and today we are going to backtest the strategy I'm usually using. As I already told you in a previous video, backtesting is a very important part of your journey because in this way you gain confidence that your strategy works and of course you are able to see what are the results that it brings. As a remark, the credits for this strategy are going to Guerrilla Trading. This is a really great educational platform where you can develop your price action trading and you can find their link in the description. And going back to the purpose of this video, my goal for the next period is to backtest Aussie US dollar from the beginning of this year, and in this video we will cover the month of January. So here we are on the Aussie US dollar chart. First of all, regarding the way I'm trading, I want to tell you that I use only 1% risk per trade, stop losses of 120 points, and only 1 hour time frame chart. So now we will go back to the 1st of January, going back to the beginning of this year, and I'm going to replace the bar from here. This video will go fast forward until I get the trade and I will explain it to you. So let's go. So here the most recent high was broken with a pretty impulsive way. We've got like 4 impulsive candles here. So we might be interested in a buy at this level, but let's see how the price will get there. Also, in this kind of formations, we may get also a bull flag. So the price has to just go up, making a high, making a low, excuse me, then a counter trend, a lower low than the previous one. And at this moment, when we get a candle in our trend, we just place a buy. So let's see if we will get one of these instances here. Okay, so here we got a low. Now this low was broken, pretty impulsive. And now we get a candle in our direction. So I will not wait now for the price to go to this level. I will place a buy right now. So a long position at the end of this candle. Stop loss 120 points, as I told you. Wait a moment, please, to erase my art from here. Okay. And now we are in the position. We can see here that this candle broke the previous high. So now our low will be here. And we still have full risk on the table. But now we can see that the previous high was broken. We've got an inside bar here. So the low will be the base of this inside bar. And now my stop loss will be 20 points below this inside bar. So regarding the next candles, if I will be tagged in and my stop loss will be hit, for the moment we secured like 1.12% for this trade. But let's see what will happen next. Okay, so here we've got a counter trend, a candle that has a high that is lower than the previous candle's high. So after the broke of this high now, our high will be here. Our low will be right here, and we will put our stop loss 20 points below this candle. Now we can also look for some scalings if we will get some instances for this, but let's see what will happen next. So this candle got us out and we are we have a winning position here with plus 2.69%. Plus 2.69%. Okay, and let's go find our next entries. So now here, as you can see, lately the price was going in an ascending manner. And in general, when the price can be sustained with impulsive direction to the upside and is going like this, broking the highs and retracing, and then broking the lows and retracing, we expect that after the end of this ascending channel, the price to broke this channel in the downside. And now, as you can see, we broke our previous low. This was our previous low, was broken by this candle, and now with this candle. So we will put a order here, a pending order at the bottom of this inside bar. So the low is 785. 785. Stop level will be 120 points. And let's see if we will be triggered in this position. Oh, so now we are in this position, but this candle is pretty impulsive in a bad way, because here we've got a really big wick that might tell us that this trend may shift its direction. Let's see what will happen next. No, we are in the good direction now, and we have a new low here, and our high is here, so our stop loss is 20 points above this candle. We have now risking less than 1%. We broke the low again here, and our new high is this candle, so we already have secured profit because we have the stop loss 20 points above this candle. Now we can also look for scalings, but let's see what will happen next. We have broken the low again here. We have a new high, so we will put our stop loss 20 points above this inside bar, and let's see what will happen next. I think we have a new low here, so 3.6, and this low is 3.1. Yes, this is a new low, so this will be our new high, and our stop loss is right here. For the moment, I'm not looking for scalings because, as you can see, we started to form a descending channel here, so we might expect for the price to go in the opposite direction soon. And we are out of this position with plus 4.29%. Plus 4.29%. Okay, and now let's go and find another entries. Okay, so here we might have another entry. As you can see, the price was going in descending way, then in an ascending way, and now the low was broken impulsively. So I might be interested to enter in a sell right here on this level. I will put my pending order here. So the low here 934 is 934. Our stop loss is 120 points. And let's see what will happen next. We are tagged in, but I don't really like this candle because it might be a reversal here. And yes, we are out of this position with -1%. Okay, I will mark this one here, -1%. And now we are going to see our next entrance. So, as I presented you in a previous trade, here we might have a new bull flag entry. So we had this impulse, we've got a low, we need now a high, a new low, and at the counter trend candle here, we will enter in a position if will be the case here. And let's see what will happen. So we've got here the first low. It's still here. Okay, we've got a new high, a new low. So now at the counter trend candle, we might enter into this position. I don't really like this bull flag because it's kind of too wide. But let's see what will it offer to us. Excuse me. So at this candle, we had to enter because this is the counter trend that we needed, the candle that is in our trend. So here we place a long position at the end of this candle. The stop loss is 120 points. And let's see what will happen. Yes, we've got a -1% really quick. I told you I don't really like this kind of bull flags that are so wide and are going so deep back into the price. So let's go next. Okay, so here I think we've got a quite nice impulse to the upside. So now I might be interested to place a buy pending here at the previous high, more exactly at this inside bar. So I will already put my pending here. High is 232. Okay, 232 with 120 points risk. And let's see if we will get triggered into this position. So now we are in, and let's see what will happen next. Okay, we've got a pretty nice impulse to the upside. Let me make these candles clearer. Okay, and we had now our low here, meaning that our stop loss is 20 points below the low of this candle. So we no longer risk 1% for this trade. Okay, now here we've got a new high. So we have here a new low, 20 points below this candle. We've got our stop loss. So no matter what, we win a minimum 1.34% of this trade. But let's see what will happen next. Okay, so here we've got another high. So our low will be right here and stop loss 20 points below this candle. We might be interested also in scalings here, but I need some more confirmations from this price in order for me to place a new order to scale here. Okay, our high is here, and let's see what will happen next. Okay, we've got a new high, meaning that our low will be right here, and our stop loss for this position will be 20 points below this candle. And now we are out of this position with plus
3.37%. That's 3.37%. Okay. And now let's go and find another entry points. Okay. So here, what can I say is that the price was going up impulsively to the upside, and now here is creating kind of an ascending channel. For me, this is a sign that the price might reverse, but let's see how the prices will be broken. So here we already broke this low with a pretty nice candle. We also have this candle here that have a huge wick, and for me this is a nice confirmation that the price might reverse. So here at this inside bar from the previous low, I will put a short position order. So here we can see that the price was going to the upside in an impulsive way, and now we can see that the price have no momentum anymore. We have created here this ascending channel, meaning that the price was trying to break the high and then retraced, and now tried again to break the high and retraced. So we might be interested in placing a sell order here. If we break impulsively a low and at a retest of the previous low that was broken, we can enter a position and going to the downside. But let's see what will happen, because sometimes these ascending channels are going also to the upside, are not any time reversal sign. Okay, so here we have this candle that just broke a little bit our low, but we want to see some more momentum, and here we have some more momentum with this candle. Is a perfect closed candle without wicks. I really like this kind of candles. So here at the previous low, we will put a sell order with 120 points stop loss, and let's see if we will get triggered into this one. Okay, so with this candle here we are in the position, and let's see what will happen next. This is a pretty impulsive candle, but let's see what will happen. Okay, we are good. We just broke the low, so our new low is here. Our high is right here, so we already are not risking 1% for this trade. Okay, so here we got a new low. Our high will be here, so our stop loss will be 20 points above this candle, meaning that we have already no risk on the table, and we can look also for scalings. Oh, this is a nice one. Okay, we need to resize our chart. Okay, excuse me, our low is right here now. Let's see what will happen next. Okay, we just broke the low again now, so our low will be here, our high will be above this inside bar, and now our stop loss will be 20 points above this inside bar. We already secured about 6.1% for this trade, but let's see what will happen next, because this is a pretty nice momentum. Okay, the low is right here, and we just broke the low again with this wick. So our high will be right here above this candle, and this candle has the high at 509, so 529 will be our stop loss point, 20 points above this inside bar. And we just broke the low again. Okay, and we've got a new high right here. Our stop loss will be now 20 points above this high. Such a great downside momentum. Okay, and now we are out of this position with plus 8.58%. Plus 8.58%. It was a good one. And now let me mark where the end of this month is, because we will backtest only January month. Okay, and let's see if we will have any other trades until the end of this month. Okay, so that's it. Let me summarize now the results for our January backtesting, and I will go back to tell you the results. So here we have the results for our backtesting Aussie US dollar in January. Well, our profit was plus 16.93%. We've opened 6 positions, 4 were wins and 2 were losses. We've got maximum 2 wins in a row and maximum 2 losses in a row. So this is the end of my first backtesting video. Hope you enjoyed this one, and if you have any questions regarding my backtesting or any other trading related questions, please write them in the comments sections below. Also, feel free to DM us on Instagram, and if you're not already following us, you can find in the description the links to our pages. If you want to see more content like this, don't forget to subscribe to our channel, and wish you an amazing weekend and see you in my next videos. Bye bye.